Thanks, keep up the great work. And if you want to hear a bear, I've got a bear in the house. Henrik, how are you, buddy? I'm going to make you the presenter, and then you'll have volume and we'll be able to see your screen. Looking forward to talking to you again. It's been a while. Welcome to F.A.C.E. So you'll see the drop prelude. Oh gosh, reminds me of Quaalude. Hi, Henrik. Let's see if you're unmuted.
Hello, Dale. Can you hear me?
Okay, I can now. Yes, Henrik.
Good. I don't know what just happened.
It's great. I lost your screen though. Let's see. You have your screen up there? Yeah, it said Prelude on it.
Yeah, it does. Yeah, it is. Yeah, that's my screen. Yeah.
Okay. I don't know why I'm not seeing it.
I'm not seeing it either. Let's.
Yeah. Do the show screen again. There you go. Okay.
There we go.
Yeah. Thank you, Henrik. Prelude. So, I understand that. I bet I know what the prelude is, but Henrik, I want to acknowledge you. You know, a lot of people have a hard time, especially on Twitter. They love to see people be wrong about things. They'll always comment about that. And then you notice at times how silent they become when the forecast that you made is spot on. And they were wrong. You ever notice that?
Oh yeah, I think all investors have tried that at some point. Yeah. So
yeah, it's a pretty selfish attitude. Anyway, you've been spot on bearish. I even remember seeing some of your tweets when we were threatening that upside breakout in gold at 1360, and some people were saying, "Well, you'll be right, Henrik, but it's got to go to 1500 first," and never broke out. You stuck by your guns with that in the euro. So congratulations on great forecasting of both the gold decline and the euro decline.
Thanks.
Yeah, nice work, buddy. So you also have a reputation that's really building. I announced that you were going to be with us today, and a couple of the members go, "Oh yeah, he's a perma bear."
No, really, I'm not. I'm not a perma bear. I think it's about timing.
Yeah, right. So right now, I mean, the last 2-3 months, it certainly has paid to be bearish. And I'm with you. I know longer term, you're looking for real important bottoms in gold, you know, where you want to back up the truck. But let's start looking at your charts. Also, I don't know where you want to start, but it looks like you've prepared something. So
yeah, let's do that.
Let's, as they say, what's the name of the guy? Something Cuomo has a show on CNN, and he's you know, he lists the headlines they're going to talk about, and then he goes, "Let's get at it." Let's get at it, buddy.
All right. Okay. So you know, when I hear people talking about trading and about, you know, how to, but first of all, I want to say I'm not a day trader. You know, I position myself for a certain in a certain direction, and then I watch it develop, and if I'm wrong, then I'm getting out of it, or, you know, taking a new position. But actually what I've done is I've built a multi market model, which actually, you know, coincides all the different markets that needs to be in sync in order to understand what is the big picture. And that big picture actually starts way out from the chart. It actually starts with an understanding of where are we in the long-term cycles, because I also do some business cycle analysis, and that starts with, you know, some of the old theoretical guys with Kondratiev and others who have had, and that's actually what my prelude is about. So I'm just seeing.
Okay, so Kondratiev, who else is a cycle favorite of yours?
But long term, I'm not doing more in the long term. I got a small Danish consultancy that is actually working a lot with this, that I'm communicating with on how to do this, and it's called Demetra, and they do some fantastic work on cycles, which has not been acknowledged by, I would say, you know, internationally, probably because they are very Danish in their approach, but they do fantastic work on the cycles basis, I would say.
Okay, so autumn ended in 2000, so the last 18 years. Besides the financial crisis and the bubble popping in 2000, you know, a lot of people think everything was fixed after, you know, what the Fed did, and, you know,
exactly.
Banks. So we're where in the winter? Is it midwinter? We're no longer.
As I see it, I mean, this is what is important to understand from the beginning, because if you understand where we are in the contractive wave in the long-term cycles, we will understand whether we have a deflationary environment or we have an inflationary environment. And when I hear people talking about an inflationary environment, I really cannot see where that come from. And that's why I stick to the deflationary outlook. I still see, and now these last couple of days has probably shown where that could come from. But you know, we have seen during the 2008 crisis and the financial crisis, the prices drop, consumer confidence drop. We know we had high employment, but that was not all of it. We were not having all the checkpoints in when it came to the things that we need to see in a contractive winter. And also the length of the winter was simply too short. So I was saying all along, saying, guys, we're not through the winter yet. And hence we need to see some, you know, development in terms of trade war. So this one was actually not ticked off, you know, a few months back with the trade war. Currency crisis, I just ticked that off. I mean, we pretty much have the evidence of that now. We will still see yields now. We have that in extreme low levels, but I think they will go even lower. I don't see the rates that we see. The hiking on the rates is in the short term, and it's not in the long end. And we will see extreme low levels of in the long end as well. And I don't buy that we have that the bear market in yields is over and done.
Let me ask you this. I did see a chart you showed on the bonds and your bullish projection. Are treasuries going to underperform the bonds, and that's one of the reasons why the dollar has a long way to go long term to the upside because of the rate differential, even though rates are coming down?
I think that the rate differential will be one thing, but I also think it'll be pure about liquidity. And there's only one true liquidity in the world, and that's the US dollar. We know that because that's where we buy all commodities and things are bought with US dollars. So there's only one real liquidity, and that is drying up at the moment, and that is deflationary, and that's why we're going to see some of the events that I have still unticked here. The pension fund crisis, I expect that also to be in the US and other places. Run from paper money to gold, yes, eventually, but we'll need to see gold correct, because as long as the winter is deflationary, gold will do poorly, and I have extreme low levels for the target for gold. And then hopefully not, I don't hope that we'll see war, but that is unfortunately also what we see during the contractive winter. Last contractive winter lasted from mid 30s to 29 to 49, around 49. So I mean, it's 25 years kind of period where things are in a deflationary mode, and these are the things that we're going to see during that. And if I have some respect for that and say, well, it has happened before, and why shouldn't it happen again? And instead of just trying to pinpoint identify the direction based on short-term movements, I mean, then probably I could be better off. I mean, I don't think we've gotten that much smarter over the years. So why not try to?
The bulls will say it's central banks, global central bank, QE, loose money that has could keep it going and avoid it. You're saying they're going to become impotent. I don't know if you've thought about this, but in 1937, which was 8 years into the last winter you're talking about, the Fed began to tighten. Just like they are now. And then it was the second half of the bear market from 37 that, like you said, we didn't come out till 49. That was well after the war ended.
Exactly. And when you look at it like that we feel like we've been going through the worst part of it, but actually I think that the worst part is ahead of us. Hopefully not because of war, because that will be really terrible.
How about debt?
Yeah, exactly. But you will see normally in a winter, by the end of the winter of contractive, you will see that there's been some kind of debt jubilee, that the debt have been wiped away for some reason, that that debt levels have gone down. And if we look at it in 2009 and until today, we haven't seen that. We didn't see it in 2009. The debt levels went up, skyrocketed, and it's even higher today. I think it's like 350% of
only the banks got a jubilee.
Oh yeah, the banks did, yeah. But that's also how it starts. It normally goes through the financial system first, and then you have it on a more sovereign basis. So it's nationwide later on. So this is what we're going to see now.
biblically, it used to happen every 40 years. They would draw the slate clean, and debtors would be unburdened, and they would start the, it would wring out all the excesses of debt and start over. So you think we will have a debt jubilee? Do you any idea what form that will come in? Default on U.S. Debt, because we are the biggest debtor nation?
I think first of all, you're going to see, the test of that in other countries. I think Japan or other places will go first, and also Italy and places will go first.
Okay.
But I think, by what I'm forecasting is by 2025 or the like, we will have some sort of monetary reset, and that's the jubilee that I'm talking about. So it's some kind of reset of the monetary system, which will then somehow wipe out the. I don't have any details on that, but again, I'm trying to paint up the big picture and then see how that works out with the help me forecasting the markets.
Yeah, do the right thing today, and tomorrow takes care of itself, right?
Yeah.
All right. So next slide, Dixie.
Yeah. So then I have a few slides. These were made yesterday, so today's developments are reading. But yeah, it's all kind of fresh. But
All right. So I know you're looking for a low in the 111 range in euros. So.
Oh yeah, but can I get back to that, because I had that just a little later here, because everything is driven by the dollar, and if you have a deflationary environment, you have a dollar that rallies, runs up, rallies. And as I see it, my analysis points to a chart like this, where I've been pretty clear that we saw the low at 88.15 around there in 2000 and around was it January 5th? I can't remember now. But anyway, but this year, and now we're going to see the last leg up in this structure, which can end at around 107 to 109 for the DXY, or even at 119. And this is, it's working out perfectly, and I can see the structures of this also, and that obviously means much lower euro levels and much lower dollar levels. So I'm seeing for this, and this works great. This model can also see the RSI is moving upwards on the monthly here, which is a strong signal. So I think what we're seeing now is a deflationary environment, and I'm also been tweeting that on Twitter, saying, okay, so what we'll have some kind of black swan event because the liquidity is drying up. We see that now with emerging markets, and we will have more of that, because that is, some kind of a self-propelling event that will take, take strength, and also driven by, the fact that, we will probably see the Fed hike one or two more times. So we will see a run-up of the dollar over the coming months, but I think it'll be rather short. I think it'll be.
How did you come up with your Feb 2019 date? What cycle is that? So you're projecting both price and time. How do you come up with Feb next year?
First of all, there is a 17-year cycle on the dollar, and that has either to be this year or last year. And as I didn't see it last year, I didn't think it was the top there. I'm predicting it's going to this year. End this year or early next year. So it doesn't matter with 1 or 2 months. That's not that precise. So there's this 17-year cycle, and it's runs in this nice trend channel. And if you look at it, normally you would also see that a trend channel formed by wave 2 and wave 4 and wave 3 and 5, and it hits somewhere around end this year, beginning of 2019. So
so is that kind of the window for your gold bottom?
Yes, it'll come on the later, and that's where the multi-market kind of model comes in. So all the models all the markets that I'm following is in sync with each other, so that I have similar time predictions on tops and bottoms and the like. So
bottom line, before you go to the next slide, basically with this kind of forecast, except for intermittent counter trend rallies, you want to be long the dollar and short the world, except for bonds. Bonds will thrive. Bonds are the only thing that'll thrive, and cash in this environment.
Exactly.
Okay.
And if you look at it here, you have cash, gold at a certain point, but you need to do it, the right time, and then bonds obviously also. So we're not done with the winter yet, and we have to position ourselves. But we have right now a spike in the dollar.
I'm getting shivers. because it's because it's summer here in Southern California. It's about 100 degrees, and you cooled it off. Just listening to you makes me want to go get my gloves and my earmuffs. I'm freezing now, man.
We just had a fantastic summer here in Denmark, so it was like 3 months of fantastic weather. So it was great.
Yeah. Okay.
Well, okay, so let's move on. So because I also do this on a shorter term basis, but I'll say that the long term models are the ones that I do the best. But what I see now is probably a run from the DXY up till around 97.88. I don't want to be too precise here, but that's a 61.8 Fibonacci retracement would be normal. And I see some kind of count like with the small red count there going up to around that level before we have probably a 50% retracement, which will take it down around 92, 93-ish area. But that will be the moment to get in the dollar, because that's when we see the next thrust upwards, and that's going to be really strong.
Okay, I like it.
So that's the dollar, and obviously the dollar, as I said, is the liquidity of the world. So that's what's going to drive everything around us. So what is it going to do with the euro forecast? And I've had this model, which is also in sync with as I said, with my dollar and the rest of the markets. And as I see it long term, we'll see 0.9 for the euro. I even have a bet going with Nordea and then in the Nordics, bank in the Nordics, on how low we're going to go. But I think a retest of the 2001 lows is in the cards. And if you look at this chart, it is a typical topping pattern. If you look at without the elevated waves counts, it's a topping pattern, which is everything above the black line. When we cross through that in, I think it was 2014, we break that, the topping. So the topping pattern is in. Then we have a sound or a healthy retest of the break, and then we're going down to the target. Which is
you have a measured move with that vertical black line to that
exactly.
Area.
So that tells us it's 0. And also, if you look at it normally, if you have an A, B, C development you will normally see that the C development is either 100% or 161% of the A development of the price. So if you look at the distance from the first black line on the top to A, that's 100, as it says in blue. And then if you take that from the top of B and down to then it gives you exactly the same point. So I'm saying 0.9, and we're in a nice trend line that also points to this, and we have a huge support area in 2001. 0.9 is my long-term target.
Okay, very clear. With an intermittent rally you're expecting from 111-ish. I have this on the daily here. Yeah, it's correct. I'm seeing this drop continue to around the 111 again. Reason being, I didn't put that in here, I can see, but I think it's also a 61 for, I can't remember why I got that. But it's a crucial and very important area, the 11.8, 1.118 area, and also and then I see a strong rally up. Normally, wave twos are based on rumors. So I'm guessing here, but let's see in the next couple of days, because I think it'll be this week or latest next week we'll see the bottom. That some kind of intervention by a fix of some sort, but it will not fix the real underlying problem, which is the drying up of the liquidity of the US dollars. So it'll rally up, and investors will get real excited, and move into and gold will be moving alongside with it upwards. But it's really just a wave two, and it's going to catch all the bulls on the wrong foot here. So I will probably be trying to see if I can get long there, but I'll rather play it by going short at around 118.6, around that area. It can even move to 120, but I don't think it's going to go that high, because I see a lot of support around 118. So that's where I'm thinking going very, very short the euro. Okay.
And also the dollar. Also the gold.
Okay. So counter trend moves coming mid-month about. Yeah,
because if we look at it, we know we've had the first move down, and this is we have a 1, 2, 3, 4, 5 development in with the white brackets, and that's the Elliott wave count. And very often a triangle development, as we had from May till July, is a wave 4, which it is also here. So I'm thinking there is some kind of, you know, and also we passed right through the whole 118 area, which has huge support back in September. I think it calls for a retest of that area. So okay. 118, yeah.
Nice look.
Yeah, okay. But then that's only, you know, an opportunity to go short.
How much of a recovery do you expect in gold? Maybe back to 1280, 1300?
First of all, I'm gonna, you know, let me just take you right there then. So if you look at that, this is what I'm expecting, yeah. So if you draw a line between the B and the D, you'll have another very thin line there, and that it gives you exactly the kind of retracement that I'm looking for. So kind of a, I think it's a 50% retracement back to 1290 or the like. That's around that area, and then I'm expecting minimum 825 by Q1 2019, but it could go as low as 750, even 730 or something like that. And that will correspond with a huge mega picture that I got, because what I'm actually seeing here on the monthly for gold is that this whole correction, let me just back up one more point here, because where we at, if you look at the theoretical wave count, we had 5 waves down, then we had a bounce in the middle, and we are now in wave 1, and we need 2, 3, 4, 5 before getting to where we're supposed to be. If you look at that in the big picture, 1, 2, 3, 4, 5, this is A. Then we have an A, B, and C even has the 5, you know,
right.
And then we're going down. We're going down with 5 waves. But what that does also is that creates a huge bull flag for us. So when we get to that point, that's when you talked about, you know, loading up the truck and then getting really, really long. But for now, the right play is short, and it's going to frustrate a lot of, even especially when we get the bounce in wave 2. What Elliott Wave also tells us is that normally an retracement like an ABC like this, we will see that the C development is either 61, 100, or 161% of wave A length, and I have it out here. So that would bring us down to the 825, which is my minimum target. It also tells us it will bring us back to the old area of the former wave 4, which is down here. So what I'm seeing is that we're getting down to this area, creating a huge bull flag, which will set us up for the last part of the winter, in Kondratjev's winter, which will shoot gold, you know, much higher. So I'm expecting a minimum 5,000, but it could be 7, 8, 10,000, 12,000. I mean, it can go much higher. Yeah. But that's also, if you look at all the money that's been printed and all the stories and the narratives that goes around gold, they're just being too early on that. Because for now, it's deflationary, liquidity is drying up, gold is going down, and that's what I'm expecting. So
okay, so there's a little difference between the February cycle I think you had in.
Oh yeah, but it could be February and March. It could be, you know,
so basically, basically the same quarter is going to happen. Got it. Yeah. Okay, Henrik.
It can even be December. I mean, it's yeah. Sorry.
It could be the end of the year. How about the something no one can call right now? Do you have a view on stock indexes?
Yeah, but that's where I've been consistently wrong. But let me give me just silver here. I'm expecting. Okay. I just heard something about silver, but I'm expecting you know, retest of 2008. So 884. Yeah. Wow. This is a huge. I mean, it's breaking down here. And you have the same kind of structure, and you'll see a development down to. And if you put it into an exponential logarithmic scale, you'll actually see that it's you know, it's around here. That's where we need to find the support, because liquidity is drying up. Silver and gold and precious metal will be, you know, and that's why I'm short miners, and I've been that for quite some time, expecting this development in wave C to develop faster, but it's coming now as I see it. So that's silver, and I got VTI, which is also very bearish, as you probably know. Yeah,
I saw that one too. That's going to really surprise people.
Yeah, but you know.
But that's going to surprise people, but you know, that goes into, you know, the deflationary cycle. Exactly. And that economies are going to weaken into the end of the winter, and demand will drop.
Exactly. We're going, and we are actually starting to see some of the leading indicators that the U.S. is starting to slow.
What if the Iranians shut down the Straits of Hormuz?
Well, I mean, I can still see a spike up to 79. I wouldn't like it necessarily because I'm short already, maybe a little too early. But I'm not getting out of that because I do expect to see. But if they do that, of course, it could create some short-term spike. I'm not an event-driven guy. I'm looking for the big structures. So the structures to me tells me that it's going down. The dollars will strengthen, and gold will, oil will drop as well. So 20 below the 2016 bottom at least.
Okay, and then it'll go to 100.
Yeah, and then it will go up at least. Yeah, because what I'm expecting to happen is that when the dollar is going to increase as much as we talked about, then of course the Fed will have to reverse. They will have to start adding liquidity to the world, and that will shoot off gold and everything else. Actually, I expect us to see a stagflation at that point, not now as people have been talking about, but at that point when the Fed really falls behind the curve because inflation's expectation starts to build up on a more secular basis. But for now, they are not behind the curve. They are actually in front of the curve, and they are controlling inflation as we see it. I know it's been moving up, but it's still within there. I think at one point they will have to put liquidity into the world that they do not like to do because it will create higher inflation and kill the dollar. Yes, exactly.
Yeah. So. Okay. So a pretty good coverage. Oh, here you go. I'm interested in it. This has been tough for everyone, man.
And especially me, because I've been bearish, and I just simply couldn't see. But maybe it's because I'm not experienced enough. But I couldn't see how these valuations could keep climbing up and up and up. But again, my play here, or my understanding is that we will see some sort of deflationary development in this. And as I've been thinking about it, I actually think when you look at this chart that you have what could be a meaningful top. We'll probably have what can be a new high, or it can be just a new, just a marginal high, or it could actually drop from here. And some of the developments we're seeing now could probably be the trigger of that. But let's see. But I think the first wave down, which will be an ABC correction, is going to be some sort of deflationary development. So I would be expecting over the coming, the second half of this year, that we will see money running out of equities and out of everything except of bonds. Bonds will be, and GLT will be rallying a lot, and the dollar, and then we'll see some sort of, some sort of Fed intervention which will create the wave B that I'm predicting into next year. But eventually, and then it could be an inflationary takeover, but inflationary development after that, as the Fed falls behind the curve that drives the equities down.
Okay. I wanted to ask you, did you have any other markets you wanted to cover?
Well, DAX.
Go back to that last one. Yeah.
This is DAX forecast. I really think we have some bad developments coming in Europe, and I cannot see. Yeah.
Yeah. Last time it was the U.S. that was ground zero with the mortgage crisis. This time, do you think it's Europe that's ground zero for what's going to happen?
Yeah, I do. I think that the euro has been misconstructed. I actually had the opportunity to talk to one of the guys who's sitting close to one of the founders of the euro, the creators of the euro. I don't want to mention names here, but and he said that they knew from early on that the euro was misconstructed, and that is coming up right now as we see all these adverse shocks coming to Europe, where Italy is, having a lot of problems, where we in Denmark, we do not have the same kind of debt. We actually have control of our finances. So you will see things, unravel to a certain, and it can also be a refugee crisis. It can be many things driving this. But what you see technically is, on a very long-term perspective, that things have been running, the equity market has been running up, but momentum behind that has been, declining. So I think this is a big one for Europe, and Turkey can be the first trigger. If you look at Deutsche Bank, which I've also been covering quite a lot, it's not solved, and we have the whole Italian bank sector. I think I actually have some, but you have 25 banks that are more or less insolvent in Italy. So who are going to cough that money up when it comes to
and then I read that Spain owns more of Turkish debt or Turkish paper than any of the other banks in Europe.
Yeah.
Okay, so the IBEX is probably pretty negative too. In fact, it hasn't been rallying at all. Okay. Anything else you wanted to show? Because I'm curious.
But then I have. Sorry, go on, Jim.
No, go ahead. GDX. Let's see it.
Yeah, I have some GDX because this is one of my plays that I want to go that I'm focusing on. So I'm also seeing a very new lows in GDX. I'm short the miners now, and again I see this inflation bound going in A, B, and C, and then I expect this to drop. We will have some kind of rally.
Cut in half.
Oh yeah. But that again will be a tremendous opportunity for everybody. I mean, this is where you want to go long with everything you got.
Okay.
Because when inflation starts to maybe run a little too hot, I'm not calling it hyperinflation or anything, but just a little too hot, then gold will do really well. And then I had, I had one thing that I wanted, because this is my inflation gauge that I'm using for actually to see where do I think things are going. And if you look at it, that's the Australian dollar, Aussie US dollar. And if you look at this kind of pattern, again, we have the drop here, which I see as the A. We have then the B up here. And then if you look at the 161% development, and you have this kind of pattern, which is a bear flag, and we have the breakout here, I could see us retesting, as I also see in many other markets, the 2000 lows, or 2001 lows, or whenever this is around 2001, So I'm expecting a lot, and this is the inflation gauge for me. This is how I measure, and this is how we're going to. So this has been a bounce in inflation that we have seen, but the second part of the decline in this quadratic winter is still ahead of us, and that's what we're going to see.
And this is also a China proxy, isn't it?
Oh yeah. Also China proxy, but China will be also driving a lot of the deflationary developments that we're going to see.
Okay. Are you advising people now? Do you have a business model? No, go ahead. Go back to what you were going to say.
No, just some appendix I had to put in, because I was just have a lot of the slides here that I like to show people when I'm doing this.
What a great presentation.
Thanks.
If you could email that to me. You know what? I'll have the video, and so will everyone else. So are you doing anything? Have you developed a website? People running to you, offering you millions of dollars to trade because you've been so hot?
No, I've got a lot of people coming to me now. Yeah, the last couple of months since and since the euro started to drop, and I am advising some people, and I am also mentoring some people. I like to mentor people how to look at these things rather than maybe doing the trading for them, because what I kind of see is people have this very short term, even though they say they're not day traders or swing traders, they turn out to be, because they sit and look at the graphs all the time. And I think it's maybe when I have the right people, then I can help them do the long term positioning, and I do that for quite a lot of people also. But you're doing day trading, then this kind of tool is not the right thing to do. I mean, there are other tools that are better than this.
All right. So what's the best way for people to contact you? Through Twitter?
Yes, please contact me through Twitter. I will be, I am having some, clients or people that I'm advising, and I of course I take a fee for that. But let's see what can be done. I don't have specific services that I do. I try to assist people in the way that they would like me to do, as long as it's not day trading.
Okay, thank you so much, my trading warrior brother and friend. You said you were gonna you look at me as a friend, because that's what you said on Twitter. So all right, you're my friend and trading warrior brother, and the biggest bear I know. And you've been on target, and you're not a perma bear, because you even look, you talked about, we have some counter trend stuff developing from lower levels in the euro and bounce in gold, but the big money's still to be made on the short side of almost everything except bonds. And what a great picture you painted. It's going to be tough. What about crypto? Any view on crypto during this winter? What's going to happen? Is it going to go away? Will it end up attracting a lot of money because of, or will that have to wait until the death of the dollar?
I'm not a big crypto fan, because I don't think we've seen the final solution to. But I'm not an expert in this field. But what I'm seeing is that when the, what do we call that, the craziness of Federal Reserve, of the Fed and the central banks will explode when we get to, when they become too scared of the deflationary development that we're going to is going to take hold. We will see, as long as liquidity is drying up, crypto will do bad. But at that moment, I think we can go a lot, very much higher in Bitcoins and other cryptos. So I'm actually, even though I do not understand it really, crypto, I think I will take a position when we get down to, if we get down to 2,500 or so US dollars for Bitcoin. And yeah, I can think, I don't even, I'm expecting, the upside, if I look at it from technical perspective, to be so absurd that, just putting a small position in it.
Yeah.
I'm 500,000 for the Bitcoin.
My goodness.
Yeah, it's crazy. So that's why it sounds ridiculous, and that's why I don't know. But it's if you look at the numbers, I think that was what I think it could get up to. And probably I'm mistaken.
You know how to purchase it and put it in a wallet that isn't made out of leather?
Oh yeah, there are some apps and things that
you know how to do that.
Yeah, yeah.
All right, maybe it could help me, because the only wallet I know how to use is the one that I'm always asking my wife for. Honey, where's my wallet? Where's my wallet, honey? Anyway.
Where you left it, Dale.
Yeah. Well, Henrik, God, it's I really appreciate you coming on, and some great macro views, and I think that you're a great follow, and I there's some great trading opportunities both ways in the next few years, aren't there?
Oh yeah.
I kind of like if your trading life has been in a drought, there are lots of rainmaker trades coming up.
Oh yeah, definitely. It's just having the right, amount of patience is probably what's going to help. And I think next
it's always being tested. It's always being tested, isn't it?
Always.
Yeah.
But thank you for having me on, Dale.
You're welcome, Henrik.
Thank you very much.
All right, man. Thanks so much for sharing your great stuff. Adios.
Adios.
All right, that's Henrik. You could follow him at Henrik Zeberg. That's HENDRIK ZEBERG. And I'll see everyone for Turnaround Tuesday. Good hunting, and most of all, don't just count your pips, count your blessings, and I'll see you tomorrow. Thanks again, buddy.
Thanks.